My $1.4 million stock market portfolio. We are about to get in depth into this one here today, folks. I'm going to show you every single position I own in the portfolio. I'm going to show you cost bases, what I'm up, what I'm down on. I'm going to share with you what stocks I'm planning on selling in this portfolio, what stocks I'm planning on buying in this portfolio, what stocks I'm planning on just holding. And obviously with the move to get out of the chef, right? That's obviously a substantial move. So I thought this was a perfect time to kind of talk about what's the future of the public account, which is an account I started around probably about I think 5 years ago or so. I started that in the private stock group, this public portfolio where they can see every single move I ever make in this account. So it's just a great learning tool where you can see exactly how I build up a portfolio, the successes I have, the failures I have, how I go about these things, how I structure a portfolio and those sorts of things. So yeah, I appreciate everybody that's always cares about this portfolio, and a lot to get into here today. And it's at 1.4 mil. And we're going to build it up, and it's eventually going to be 3 mil, and then it's going to be 5 mil, and then it's going to be 10 mil, and it's not every year is going to be up. We're going to have some down years. That's part of this game. But we will thrive over time, and we'll build, okay? And that's exactly what we've been doing. So appreciate everybody joining me as always. Hope you guys get value out of a video like this. Let me know if you do in the comments section. And let's go straight into this, guys. So by the way, as of total right now, just over $1.4 million in this portfolio, okay? So I ranked them from the largest positions to smallest positions here, and we're going to go through them all, okay? And if I'm going to buy more of these stocks, sell, hold, in my opinions. Meta, biggest position in the portfolio. This makes up 30% of the portfolio, so it obviously matters in a significant way. Now, the important thing to understand, it's not like I purposely made this 30% of the portfolio. It's gone up quite substantially. We're up $202,000 on the stock as of right now. I have no intentions to sell the stock whatsoever. I mean, I think 200,000 is a very small amount from what we'll be at in a couple years from now in regards to Meta stock. Great balance sheet, obviously. The big thing for Meta is their profitability is about to skyrocket for this company. And you're going to watch over the next 4 quarters, their net income, their earnings per share rise in an extremely rapid way, in my opinion, okay? Cost base on this one for us is $122, okay? In regards to Meta, am I planning on buying more shares, selling the stock, or just holding what I have in this particular portfolio? So in this portfolio, I am planning on holding, certainly not selling. Meta is going to have to be at least 500 to 600 range before I even consider selling in regards to stock. So there's so far from Meta to go here that I can't even consider selling it. Buying it, I'm good. 30% of the portfolio is in Meta stock. I feel comfortable with that. I don't want to up that stake anymore. No, you tell me, what if Meta went back down to $110? Different scenario. Then I'll start adding Meta again. But here, I'm fine with just holding it. Do I still think Meta's a steal deal? Absolutely. Is it still easy money? Yes. But I do believe now, since Meta's had this move, I believe there's a few other stocks that are easier money now at this point in time. So that's where I'm at with Meta. I continue to be a proud shareholder of that, and I have no problem with that being, when you own Facebook, Instagram, and WhatsApp, plus you got the VRAR opportunity there. Yeah, I feel very comfortable with that one. Second largest position in this portfolio is Tesla Myesla. We're up $240,000 on Tesla here, 612% gain. Obviously, I took a ton of the profits of Tesla over the past, specifically 2020, 2021, took just epic profits. And this is what I hold in regards to Tesla right now, 1,665 shares in this portfolio. So in regards to Tesla, yeah, by the way, cost base is $23.59. In regards to Tesla, obviously they got the energy opportunity, which is a business that's building out rapidly, right? Obviously, the auto business is a core business for them, right? Cybertruck's going to be hitting in a major way next year. It's going to obviously go into production this year. So Tesla, in my opinion, has a brighter short term than I think a lot of folks are anticipating here. Obviously, the car market's tough right now. Big ticket purchase items are tough right now. Homes, cars, furniture, all that type of stuff, right? Even you could look at a stock like Whirlpool, washers and dryers, and even those sorts of things, right? But at the end of the day, like Tesla's going to continue to thrive over this next decade, in my opinion. The whole market's coming to them. So with Tesla, am I planning on selling the stock? Am I planning on buying the stock or holding the stock? For me with Tesla, I'm actually inclined to potentially add some more shares, especially if this stock goes under 150. If it goes under 150, that's really where I like to start buying some shares again. Under 125, and that's when we start calling it a steal deal, okay? So right now I'm just holding, but don't be surprised if I buy more shares in this portfolio. It already makes up about 20%. So I'm going to be a little gentle if I am adding any Tesla here. And the reason being is if you add up Meta and Tesla, those combine for about half of the portfolio, right? Which I really don't want to go much over half the portfolio. Now you say if these stocks continue to go up, then that's a whole different scenario because then they're going to become even bigger weights. But I don't worry about weighting when it comes to a stock price going up a ton. I worry more about weighting about when I'm buying in the position. Am I putting 30% of the portfolio in that position, or is it because it went up so much, okay? So that's Tesla, that's Meta. Next up here, big down position here. Corsair Gaming, CRSR, down about 30% on this stock, down $88,000. So in regards to Corsair, I got a really bad cost basis on this stock, $27.30. This was a stock I started buying kind of toward the end of the hype cycle, excitement cycle, and I just paid overvalued valuations for it. At the time of buying it, and this is a good lesson for everybody watching this, okay? Very good lesson in regards to me and Corsair. When I started buying Corsair, it looked actually cheap. When you looked at it at a PE ratio, it wasn't trading at a high PE at all. It wasn't like some of those other stocks that were trading at hundreds of PE or no PE because it was unprofitable. But I was actually still paying an overvalued valuation. I just didn't realize it. Why didn't I realize it? Well, they've just gone through a massive boom cycle in their business, right? Everybody was forced to be home 2020, 2021, right? So gaming hardware sales were insane. Streaming hardware sales were insane, which they own Elgato. And so they had this kind of like crazy demand during that time period. And then 2022 was the come down of that. And we're just in the final stages of that come down now. And so the good news for Corsair is they're back on the uptrend now. The stock actually just hit a 52-week high, I think it was yesterday or the day before. So that's the good news. But it doesn't take away from the fact that I paid an overvalued valuation. I got kind of tricked into paying an overvalued valuation. I should have thought more about like, well, what happens when everybody's not forced to be home anymore, and what does that mean for Corsair's business? Okay, so I should have saw that more coming, I guess you can say. Corsair is a great company. I love it for the long term, but there's still I paid an overvalued valuation. I should have waited to 2022 to buy that stock instead of starting to buy it in 2021. Like that's just bad pricing on that one. I think it will come back to my cost base, and I still will make money on the stock, but let's be honest, it's not going to be what it could have been. This stock bottomed out at $10, $10-something a share. That would have been nice. Buying in $10, $12, $14 range. Elf on a shelf, we're up 1,140% on this stock. I've taken most of my gains in Elf over time, and I regret every share I've ever sold of Elf. Every last share, okay? All I have left is 1,000 shares of stock, and I mean, back in the day, I probably had between my different accounts probably maybe, I don't know, close to 10,000 shares probably. So I regret every share I ever sold of Elf. The company just executes on the highest level possible. The revenue's been incredible. The margin's incredible. The profitability. What they've done with their brand, it's amazing. They've exceeded everything that I could have ever imagined for the company. This is the opposite of a chef. The chef did far worse than everything I ever anticipated for that company. The Elf did everything far better than I ever anticipated for that company. Absolutely incredible. Now, am I planning on buying more of the stock, selling the stock, or holding the stock? Well, certainly not selling. I learned my lesson in regards to that one. You don't sell companies that are going on these massive runs and they got game-changing management teams that are just knocking the ball out of the ballpark. And you look at Elf's numbers over the past 3 or 4 years, it's insane. They've done so phenomenal. So definitely not selling. Right now I'm just holding. I don't know what their growth rates are going to shake out at. That's what I'm having trouble figuring out. So that's what prevents me from buying. You may say, well, maybe it's the 728 cost basis or whatever it is. That certainly could be a reason, but that's not a good reason to not buy a stock. At the end of the day, you got to look at it and say, am I getting undervalued stock or overvalued? And I'm just a little confused. They reported such ridiculous growth this last quarter. I'm trying to figure out, is that like going to continue on, or is this just kind of a one-off scenario and we're going to come? I mean, I think the revenue growth was something like 49% last quarter. And so I'm really trying to figure out here, is this realistic? Are we going to keep growing at these sorts of rates, or are we going to come down to maybe a 10% rate or 15% or, that's what I'm trying to figure out. So that's where I'm a little confused, and that's what keeps me from ultimately buying that stock right now. Next one up here. AMZN. We're up to $88,000 position here. It makes up 6% of the portfolio. We own 800 shares exactly of this one. We're up $7,400 so far in this stock. It is obviously a newer position for me. This one's really been a 2023 build out. I'm not going to stop buying Amazon probably this entire year. Anything under 150, I'm buying Amazon. So I doubt it goes over 150 this year. So I likely have this entire year to just be a buyer of Amazon. I want to build this into a 10% plus position in the portfolio. So basically meaning I'm not done buying this stock anytime soon. You'll see me add more and more shares. The e-commerce business has exponential growth over the next 10 years. AWS is still early innings. Listen to what Andy Jassy has to say. Andy Jassy is like Jeff Bezos 2.0. I mean, the way that man thinks about the long term of the company's terrific. Obviously, they own Twitch and they own Whole Foods as well, which is just kind of like smaller businesses for them. And their advertising business has taken off like a beast. I love Amazon. And they've done actually a lot of their CapEx. I don't want to say it's done at this point because they're always going to be spending, but they invested so heavily over the past 3 years that I think the next 3 years will be a little light on CapEx. And I think ultimately this is just going to be another meta situation where you're going to see their net income and EPS go to the moon over the next couple of years, regardless of what happens in the overall economy. That's my opinion and perspective on Amazon, okay? And so in regards to that one, obviously I'm still buying. Skyworks Solutions. So this stock, so far we're up about $14,000. We're up 24%. We used to be up a lot more on Skyworks. It's given back some gains certainly over the past year and a half or so. This is a good dividend stock for me. It's a value play as well. It's done me well over time. I mean, $14,000 in gains, $14,000 in gains. Plus, I've held the stock over several years, so it's also paid me out a lot of dividend money that you don't see accounted in the amount, right? This is accounting for what the percentage of the share prices move. This doesn't account for all the dividend money. Skyworks has thousands and thousands of dollars of dividend money they paid me out over the years, right? So Skyworks, really like it. Really good company. Huge amount of their business comes from Apple. That does make it a risk factor. But at the end of the day, Apple's Apple. They can continue to put up their numbers. Am I going to buy, sell, hold this stock? Skyworks Solutions, for me, now at this point in time, is actually a buy. So I bought some today. Literally. Okay. So this stock is once again a buy. Love this one for the long term. Good income statement, good balance sheet. Really like Skyworks Solutions. Next up here, Honest, HNST. We've gotten destroyed on this stock. Destroyed. Straight up. We're down $106,000 on this position. $73,000 position as of right now. It makes up about 5% of the portfolio. Okay? So, in regards to Honest, obviously I really like their brand that they've built there. I like their product categories. I can't buy more Honest right now in this portfolio. I've owned too many other speculative stocks, which some of them we still got to get through in this portfolio. And I am worried about what if it's a TTCF 2.0, okay? I don't think it is. The good news is they have a CEO now in place with Carla, right? Who was a vice president at Amazon. She worked, fairly high up in other companies as well. So for her, I think she's the right person for the job. The key word is I think. I don't know yet. She's got to put up the numbers over the next, 3 to 5 quarters to prove it. Based upon everything I heard on the conference call, she's very focused around margins, getting out of countries that are unprofitable for them, and everything seems like she's saying all the right things. But now we got to see the numbers over this next 9 to 15 months. If she puts up the numbers, this stock's going to go on a pretty incredible run here, and I might actually be able to start buying it again. But she's got to put up the numbers. This company's margins were pretty pathetic in the last quarter, 24%. They need to get back to 30% plus margins, then 35%, 40%. I believe they can do that, but they got to do it. And so that's where I'm at with Honest. So for me, in regards to this account, it's just a hold for me. It's just a hold. And ultimately, I still have a lot of faith in the company, but got to put up the numbers. Next up here, Palantir, PLTR. So far, we're up about $7,800 in this stock. Up 20%, $46,000 position here. It makes up just over 3% of the portfolio, 4,855 shares. In regards to Palantir, cost base $788. In regards to Palantir, am I planning on buying the stock in this account, selling it, or holding it? Okay, I can tell you this, absolutely buying it. In regards to Palantir here, cross sections of data and artificial intelligence, helping governments make better decisions, helping companies make better decisions. I don't think there's a way Fortune 500 companies aren't going to have to consider using Palantir over this next couple of years. With everybody talking about AI, the whole shift is to companies like, obviously, a Palantir, who's been working on AI for a long time before it was a cool buzzword over the last 3 to 6 months. Great balance sheet at this company. I sleep well at night. No debt. $2 billion plus of cash. Alex Karp, he's out there, no doubt about it, but dang, he's built an incredible employee force, one of the most talented employee forces. I've heard from even people inside my own private stock group that got jobs at other big tech companies and said they tried for Palantir. And they told me they just couldn't get in. It's a whole different animal in trying to get a job at Palantir. Like they're next level, above even a lot of the big techs, which tells you something about the employee force there. And you ask people that are in the industry about what Palantir's up to, and they all speak very highly of what Palantir's up to here. So in regards to Palantir, I'm very, very bullish on the company over time. I would love to build in a bigger position. Now that it's actually profitable, I can build into a much, much bigger position, and that's something I hope to do. And so yeah, love Palantir. Next one up here. Oatley, this ain't no jokely. Down 24,000 in regards to this account, position. Down about 40%, right? Oatley. This is a better version of Tattooed Chef. That's not saying a lot, okay? It's a better version of Tattooed Chef. The thing I'll say with Oatley, and they actually just got a new CEO in there, but the thing I'll say about Oatley is, although it's a huge money loser, and I'm certainly not that excited about what's going on with Oatley, the one thing I'll say about Oatley, they have managed the business much better than the chef, especially in regards to some of the recent changes they made that I think we're going to definitely help margins expand over this next couple years, and the profitability get to a much better place, and the cash flow get to a much better place over this next 12 to 24 months. And so they made a lot of decisions to basically have others run the facilities and focus much more now at this point in time on the product, marketing, what they do well, which I definitely appreciate and I definitely like. And so in regards to Oatley, I am more optimistic on it than I might have been 6 or 9 months ago. But with that being said, I haven't been happy with it. Let's put it that way. And obviously the price of oats going to the moon in the front half of 2022 didn't help the company. That hurt bad when, their two main products obviously in Oatley is water and oats. So in regards to Oatley, like I said, it's a better version of the chef, but that's not saying a lot, okay? So for that one, I'm just holding for now. I'm kind of wait to see what plays out over the next couple quarters. If I don't like it and I don't see margins increase quite a bit over this next couple quarters, then I'm going to probably make a move out of it. If I do see the margins improve over this next couple quarters, them getting closer to profitability, then I'll continue to hold it and be a happy shareholder. But for now, it's we'll see. That's where I put Oatley, okay? Next up here, Revolve. Really happy with this company, RVLV. Stock's up about $12,000 for us, with about 51% in this one, up 2.6%. They're an e-com company focusing specifically around clothing. I really like the executive team over there. They've done a good job running the company, even in a tough environment. They've been able to stay profitable, positive net income, good balance sheet on the company, good brand. So in regards to Revolve, this is actually a stock, if you're going to ask me, am I buying the stock, selling the stock, or just planning on holding? Buying. Absolutely. In regards to Revolve, I really like this one. Regardless recession, no recession, it doesn't matter. This is one I feel comfortable just buying the dip in, throwing in the filing cabinet. I have no concerns about that. And when the clothing market gets healthier again, I think Revolve's going to do very well again. And so right now I'm just using this time period under $20 to accumulate. I think the stock could be in this under $20 club for a bit here. And so a bit meaning the next 3 to 9 months. And so while it's in this under $20 range, I just want to accumulate shares. So I really like the company. I like everything they're doing. I like the financial statements. They're going through a little bit of a tough time, but they're still keeping it profitable. And I think they're going to build into a stronger company coming out of this than what went in. So I'm very bullish on Revolve over time. The Planet, ugly, down 50K, down 70% in this one. It's hurt us very bad, right? It's only 1.5% of the portfolio, so that's good, but it's been a vicious kind of cycle. The Planet, it's their industry. I mean, their industry's just been horrible. There's nothing, almost pretty much, I don't think there's any Jack Jackson play that's done well in the past 12 to 18 months. It's the industry's been awful. Pricing went down in a massive way in the industry. There's been no excitement around federal legalization of the product. It's been in a bad place, man. In regards to Planet, I've been happy with the way they've managed the company. They've kept a big cash balance. There's no could they go bankrupt? Could they go under? None of that. And I actually do believe the stock's in a bottoming out process. I believe it's actually bottoming right now. And I believe it will start moving up in the back half of this year. And actually, I think it's going to have a pretty incredible run over the next few years. That's my opinion, perspective. We'll see what happens there. But that's what I think is going to happen. So the market's been really, really bad for these sorts of companies. And there's a lot of companies that way over leverage in their industry that have gone under and just had a discount product to whatever price, like just get rid of it. So yeah, it's been a tough ride, but I think the story's going to get a lot better, and I mean a lot better in the back half of this year. We'll see, but I think that's what's going to play out. Okay, PayPal, brand new position for me in the portfolio. It's a growth stock trading at value prices. The forward P on the stock's like 12. It's a joke. It's a growth stock trading at value prices. It's like free money. Give me the free money, okay? And that's PayPal. And so in regards to PayPal, I'm very bullish over the long term. I'm going to probably build this position out to be 3 to 5% position in the portfolio. Am I going to build into a Tesla or a Meta? No. But could I build this into a 3 to 5% range? Absolutely. Okay. And I don't see myself ever taking it above 10% unless the stock price went up a ton. But I actually love the setup for PayPal in the short term and the long term here. So I'm going to definitely accumulate probably pretty quickly in regards to good old PayPal. And PayPal and Amazon definitely going to be two of my biggest focuses in the portfolio. Next up here, Avant Brands. 73% down. It's our worst percentage stock out there. If I recall in the portfolio, it's been ugly, right? Of about 1% of the portfolio. Avant's done a tremendous, look at the company numbers. You can't say the company hasn't done a tremendous job running the company over the past 12 months. But with that being said, these sorts of micro cap stocks, no one wants to own those right now. And they're in the Jack Jackson space, and like all those stocks have gone down like 70 to 100%, depending upon the company. So they're a good company in a bad market right now. A good company in a bad market. And so anyways, in regards to that one, I just continue to be a holder there. The company gives me based upon the company numbers, they give me no reason to sell that stock. 0% reason. If anything, I should probably be buying it, but dang, I already own a few other speculatives in this portfolio, and I don't really, I shouldn't really be adding any more spec to the portfolio. That's why when you see me adding positions, it's good long-term growth companies that aren't facing any problems really. And then last two positions here, a small amount of SH, obviously. I have my big hedges in my other big portfolio. And then I just started a position in Cake here. I'd probably build that quite a bit bigger over this next 6 to 9 months in regards to that. So, certainly the ones I added today are probably going to still be my main focuses over this next 6 to 9 months in terms of positions I'm adding. And that's the public count. If you'd like to apply to join my private stock group, the private wealth group, check out the description area. That'll be for an application down there, and you can access all my course curriculums, learn everything I know up here about investing through all the different course curriculums, be part of our private Discord chat and things like that. If you want to join my Patreon and be part of that Discord chat and also be able to see the moves I'm making in my Patreon portfolio on a weekly basis, then also check out the description area. That'll be the Patreon. I just made 3 moves in the Patreon portfolio, including I bought 1 new stock here today. And so if you want to check out that, that's linked below. Much love as always. I appreciate y'all and have a great day.